today, which obviously down 0.2% there, but as John mentioned, I mean, they're off 2 days of really good gains.
It is off 2 days of gains, and if we have a look at the market, while we were down by 0.7%, we were much better during the session. In fact, if we have a look at the intraday graph, this is what it looks like. Now, the SPI futures this morning had been pointing down 0.4%, but for most of the session, we were down around about 0.4% before at the end we saw another downtick, and that took our market down. But it was interesting the way the sectors moved as well. We saw underperformance by the defensive sectors, and this is a trend that we've really seen in the past month, where some of the cyclical areas have been outperforming and we've seen the defensives underperforming. So areas like the staples, the healthcare, the utilities, the telecom sectors, all these areas were down more than 1%. Instead, it was the cyclical areas which really outperformed, even though we saw a loss in most of those sectors. The industrial sector was the only area of strength on the market in terms of sector performance. But of course, with the markets concerned about US action in Syria, as well as potential US tapering, I guess that they were some of the other considerations. It was the Syria concerns which really did dominate our market performance overnight. We saw that in terms of a rise in oil and in terms of a rise in gold. So we saw Santos reaching a 52-week high today. The gold subsector also doing well on the market today, but all in all, a loss of the market.
Is your thoughts on the impact on the equity and currency markets there from that GDP number?
Well, there wasn't a huge impact in terms of the equity markets. If we have a look at the GDP number, we saw 0.6% growth on quarter or 2.6% growth on year, and it was the mining states such as WA and Northern Territory which really did see some strong growth. We have a look at the impact on the Aussie dollar, though, a much more dramatic reaction. If we have a look at the Aussie dollar, you can see exactly when those GDP numbers came out. So it does look like currency traders really betting that, you know, the strength that we are seeing in the Australian economy at the moment makes it less likely that we are going to see some imminent rate cuts by the RBA. So the Aussie dollar back above 91 US cents, but not a huge reaction in terms of the equity markets.
This is space. Monadelphous there had a contract win. The shares gained 3.6%. What do you think of this company?
It was a good day for Monadelphous, and it sits in the mining services area, so it has been smashed over the last 52 weeks. But after its report, this reporting season, the shares have started to rise again. They had come out with a record result in terms of this earnings season. And if we have a look at Monadelphous today, announcing a contract win related to Rio Tinto's project, and if we have a look, it's worth about $235 million. It's not huge in the whole scale of things, but I guess the thing with Monadelphous is that it deals in large-scale contracts, and that's one of the advantages it has. And if we have a look at the tender pipeline, it's got about $3 billion worth of tenders at the moment. So we're still watching Itchies as well as the Wheatstone project for potential wins there. So the next few months, I think, are going to be crucial for Monadelphous. But of course, the real test for mining services companies like this comes next financial year and the one after that, after we see the peak in terms of mining capital expenditure. But for the time being, these mining services companies have been sold down very heavily, and we did see some good news from the likes of Monadelphous as well as Cube today, and that seemed to lift some of those other mining service companies as well.
I wanted to ask you about, and that was Hills Industries, obviously the maker of the iconic Hills hoist. But I just wanted to ask you, I mean, they're obviously trying to pin themselves more towards telecommunications, and after their big restructure, they've continued to make some acquisitions today.
And it's understandable what Hills Industry is doing. They face a difficult construction industry, a difficult building industry, as well as a difficult steel-making environment as well. So it looks like this restructure means that Hills Industries is trying to find businesses where there's an advantage in a trusted environment. And there's a key reason why they're doing that, because in the last few years, they've been facing stiff competition from imported goods. So a substitution effect happening because of the Aussie dollar. So really, they're looking for an advantage and trying to find an economic mode for their business. So we have seen a divestment of a number of assets over the last few weeks. Today we heard that they will be divesting one of their plumbing businesses. So just a continuation of this change in strategy because of the difficult environment that we have seen in some of the key industries that Hills Industries deals in. So a bit of a change in structure. It does mean that its war chest is building up because it is divesting these assets and it is looking to make acquisitions. So just keeping a close eye on this stock because of the change in strategy that we're seeing coming through.
Yeah, all right. Great to get all of your thoughts.